All right. So I appreciate everybody's willingness to listen to what I have to say, but today I have to take some humble pie. Look at this. Oh, wait a second. Oh, and that's not the way it's supposed to be. Let's go like this, maybe. There we go. And it's not showing my screen. Application. There we go. Now it's showing up. All right, so this is silver, folks. Silver's on the climb. It's beyond belief. I actually can't believe it's happening. But I guess it's just the way it is. The market's always right. Gold also now climbing up against that all-time high like it did earlier this week. We've got the Dow Jones also right up against that all-time high. So with the three of these are fiat markets. Okay, these are fiat markets. To watch the Dow Jones go up at the same time as gold and silver, for me, that just it screams manipulation. However, there is a great amount of counter movement to the digital renaissance. I think that what we're seeing here is more and more people showing faith in gold and silver. Yeah, this is almost encouraging to watch from a perspective of people waking up, people wanting to be free, people recognizing that that fiat system is corrupt. Now, a part of me wonders if some people are buying gold and silver, but then some people are buying cryptos, and that really what we're watching in the stock market, in the fiat market, is the transition into the digital currencies. That would definitely help explain why gold and silver and the fiat markets, the Dow Jones, are all going up at the same time. I would expect that once the bubble is fully underway, I shouldn't say that. The bubble is fully underway. We've been experiencing a few weeks of chop, basically since Christmas, basically. And again, I am in no way disheartened by this. The fact that I'm not right on these things is really quite insignificant to me. I'm actually encouraged by how much this is going up, despite how much despite how much the Dow Jones has still faith. Think about it. These are high prices. The highest it's ever been. I mean, yeah, sure, we got the all-time high here just at the beginning of December. But I mean, this is the highest it's been, like this range here, ever. And to see the effects of that in other markets, it's for me, we're just close. Yeah, I'm not really saying a whole lot right now, so I'm going to go ahead and jump through these charts. We're going to just look for opportunities to see where we're at. I believe that right now we are at incredible times to buy. My contemporaries agree, and most of my contemporaries, they've been here for 2 or 3 crypto cycles already. So I only hit the first one back in 2017, and because once 2020 came along, I was helping out with lawful non-compliance, so I didn't get a chance to play the other cycles. This is just getting to be more and more fun as time goes on. I want to let's just take a pause here for a second. Yeah. Okay. So Bitcoin is by all in any other instance, I would say that this is not a good buy. But we've got 2 targets to shoot for here. The first target is 150,000. The second target is 180,000. This is where the price is definitely going. So when we take a look at, and I say definitely, this is the projection. Um, it- everybody that knows anything about this, they're all saying, and while there's one guy that I follow, he's been calling things left, right, and center. He thinks it's going to go to 250,000. Whether it goes that far or not, I don't know. I mean, it has the potential to do that. There's no question. But I'm setting my targets at 150 and 180,000. And in light of that, we can take a look at the previous price action and get an idea of what kind of support we have. So I'm going to go back to the daily chart here so that we can see things in a larger context, especially since the election. Remember, every election we see a big movement. Look at there was actually here after the 2020, we can see that there was a little bit of whiplash and then some movement, some pullback, another movement, and then whiplash again for a while. So this is normal behavior. What we're watching is normal behavior, just a different pattern. Shooting out right out of the gate, we've got this, lots of squiggly lines. And we've had the pullback already. This all-time high that was formed, this was an all-time high at one point. It retraced 17%. And on Bitcoin, that's a big deal. I mean, now Bitcoin's market cap is $2 trillion. So $2 trillion, it takes a lot of money to make this move up and down. And so the support that we've found here is solid. Now, I'm also prepared. I'm very prepared for if it to go down and actually retest this 80,000 area. Even if it was 85-ish, I wouldn't be surprised. At the same time, because of how much, I'm going to go back to the 2-hour chart so we can see what's happened over the last few weeks. As you can see, this area here, which has provided some major resistance and support in the past, this is now definitely a big test down here to create a new high on the all-time high. This was from January, so middle of January, coming back up again and creating a new high on January 19th, just the last, 21 days ago. Is that right? No, 11 days ago. 11 days ago with that all-time high, that signifies a new movement is ready. Okay, so we had this downward trend occurring for a while. In fact, that's when we created that high back in December, and then we created this high here, but of course it was a lot lower. So that's a trend. But you can see, look at how that trend line providing that resistance actually ended up now providing support on the other side. So here, the price action stayed below and even created new lows. So this is an actual trend here. This is an actual trend. And despite this trend, we broke out of it right here. So we're not in this anymore. So being above this and having this whole rectangle as support all the way since here, I mean, this whole area is just chock full of volume. So having this dip down like this is a strong test, but then this downward trend got denied right here. What is this? January 16th, in preparation for the inauguration. There's the whiplash that we had for the inauguration. There's the 19th, 20th, and then of course in the 22nd, 21st and 22nd, it's still bouncing around. Look at how much of a swing this price action has. And yet, with all that volatility, it couldn't go below that trend line. In fact, it's been using that trend line ever since as support. So, very encouraging price action. I might not know which direction it's going. as I showed with the silver and the gold. I don't always know what direction it's going every time. But I do know that we are here at this base of the bubble. Folks, the amount of money that's pouring into these things is actually staggering. I'm surprised it hasn't happened yet. But then I have to remind myself that a lot of the purchases being made are through ETFs, which are off chain. So it's not affecting the price yet the way that it would if these financial instruments were actually on chain instruments, or what we would call DeFi, decentralized finance. Because they're not on chain, a lot of the volume that we're seeing accumulate is not affecting the price, except in these micro movements that we notice occur within the retail trading as the news comes out. So whenever this news comes out, there's whiplash, there's movement all over the place. Oh, it looks like the Security Commission is going to deny this application. Oh, look, the Security Commission wants this coin. And so that back and forth is creating a lot of insecurity in the markets. Yet we are not breaking formation. So the whole thing is in essence very encouraging to see. It's just it's a game of patience. It's what it boils down to. I think that patience is coming. I think that patience is going to be paying off here in the next week or two, significantly. Ethereum still up on here right now. It's up against this the trend line. It's going to be interesting to see what happens, folks. I've been calling for this to break out since it was going down, saying, yeah, we can break out anytime. We could break out anytime. We could break out anytime. Well, I want to show you something. I don't think that we are going to go down much more. And that if we are, it's likely going to simply retest this level, just like it was way back. My hand gets cut off. But way back over here, this area, I think, is going to get one more test similar to what we saw right here. So I'm going to go ahead. Oh, I did want to do this. I'm going to go ahead and just create a little box right here so that we can get a visualization of what this area is all about. I've been sharing with you guys, I've been buying and selling back and forth as things are high and low. Okay. I'm not doing that anymore. Right now, I'm just buying. So whenever I get some Canadian funds coming in, most people pay me in cryptos now, but whenever I get some Canadian funds coming in, I'm just turning it right away into Ethereum. And I think it's and the reason why is because Ethereum is definitely going to grow at a faster rate than Bitcoin here for the first little while, simply because of what I was telling you earlier this week. And if you missed it, go check out my YouTube. I've got my live streams all up there. But earlier this week, I was talking about how Ethereum is actually kind of a sleeping giant right now. A lot of negativity towards Ethereum, and there are lots of reasons why I dislike it as well. However, recognizing the position that Ethereum is in and being able to provide liquidity and access and an instrument with which the institutions can start tokenizing all of our monthly bills. That makes Ethereum a perfect utility case for those big corporations. To be honest, it's not a bad system for them. Not so much for us. We're kind of playing around still. AI coins are definitely fun, right? And so we use Ethereum to access those. But I have a feeling that we're going to see a shift probably this year where the retail traders like ourselves are going to look for opportunities in other chains. And not that Ethereum won't have any. There probably will be some. But I have a sneaky suspicion that we're going to see some other chains coming out with real-world assets, AI coins, gaming coins. And that as that occurs, we're going to see Ethereum start to shift into being more of a utility coin for multinationals, large corporations, service corporations like Epcor, and energy companies, so on and so forth. So Ethereum right now looks like it's high up in this channel, and I'm calling it low. I'm just going to go ahead and buy as much as I can right now because I don't believe that we are, well, I know we are not far away. This whole AI thing is turning into a war. Remember how it was always that whenever America went to war, the economy all of a sudden got a nice boost. It was always that way. And it was almost like war was incentivized. Well, it's not almost, it actually is. War is incentivized in the monetary system that we are migrating away from. In order for America to have a hope in hell of being able to compete on the world stage as far as technology, advancements, research, all that stuff, in order for them to compete, they are going to have to, because of the choice that they've made to be so nationalist, meaning they are not allowing it. Like Trump is just basically saying, if you want to make stuff in America, you are more than welcome to come here. We're going to make sure that the taxes are favorable for you, and that and he's even talking about no tax on cryptos. He wants things to come into America, but what that does is that he's also closing things off from America in the form of tariffs. He said, if you don't want to bring your stuff to America and manufacture here, that's fine. You're allowed to do business wherever you want. Just know that your products coming to America are going to have a tariff. And he's going to fluctuate the tariff depending on the product and the company. So, what does that mean? It means that he doesn't have any willingness to look at the world in a new light. He insists on looking at this world with the perspective of an old financial system. And so that makes him irrelevant in the long and short of it. As a result, though, this mentality that we have to go to war in order to bring our economy back online and be able to compete, that is taking over the narrative at the moment. And it's different, though. This isn't fifth generation, or rather, this isn't the old style of warfare. This is fifth generation warfare. And it's also important to note that a lot of the violence that we've been seeing, especially over the last few years, both in Ukraine and Gaza, let me tell you, what those types of assaults are for is to use up old, archaic, outdated, and obsolete technologies. So they've got a bunch of bombs sitting in the warehouses, and they realize that the shape of war, the face of war is changing. And so then what they got to do is they got to dump all of these munitions as much as they possibly can to make their enemies' lives as difficult as possible, knowing that they can do it because they've got backup. It's kind of like in chess. If you're playing chess and you're making a move to attack, you got to make sure that you've got backup, so that if they come back with a counterattack, you can just wipe them off the face of the board. And so that's what's been happening over the last few years. All of the world powers have been basically dropping their old munitions on each other because they're clearing things out for a new world stage and a new world order with new world wars. And the war that is coming to America is a technological war. They are going to be competing and throwing everything they've got into the military-industrial complex, but this time the military-industrial complex is building computers. And so in order for the economy of the future, which is all digital, this monetary system that we're going into is digital, whether we like it or not, because that's where we're going, the only way that you can wage economic warfare is through computing. And so the push, I believe, this war that is being created in order to stimulate the economy is going to be between the world powers and a race to see who can get the most effective AI on the market as fast as possible. America's strategy is to centralize the AI. Not a good idea. Chinese know that. And so what they've done over this last week is released two now. First, they started with DeepSeek, and now there's another one. I can't even remember what the model is called. But now there's another model that is even more refined and cheaper to build, and cheaper to train, and cheaper to run. And they offered that for free as well. And so China is simply looking to have the American public utilize their tools because they simply want to make sure that America's AI doesn't get as many users as they want. This is a war for data. The playing field of the future. They want the land. There's no question. They want the land. And there are land grabs happening on all over the place. But what they really want is all the data. And so the war of this year is going to be for our data. Now, I'm of the mind that you just need to privatize your data and you'll be fine. And we are happy to help you set that up, because if your data is not private, then it's going to somebody and it's going to be used and capitalized. And most importantly, it will be fed to AI with the specific intent for AI to learn what language, how to form its language to get you to buy more stuff, or to create more data. Because if you're not buying something, if you're not consuming from the market, then you need to be able to produce for the market. And so you're going to be given messages one way or the other. Consume more data or create more data. And that's good. Those are going to be your incentives. Those are going to be your choices, because they need to win the war. None of these nations want to be left in the dark. None of these nations want there to be an AI capable of hacking their infrastructure. None of these countries want it. And the reason why we're going through this, folks, is because of the old paradigm that there is a division between us. And that old paradigm is tearing humanity apart. And we see it manifest in the way that these nations are fighting for the data. It's actually obscene. But at the same time, I'm super happy because I take a look at the position that we're in, where we're headed in this technological war between technocrats that are wielding governments as their mode of violence, as their enforcement arm. That's basically what's going on. We've got a bunch of technocrats using governments as their arms of enforcement. That's the best way to put it. That is not going to end well. But between now and then, we have an opportunity to take advantage of this wealth transfer. And so I didn't plan on sharing that much today, but that's what's going on, folks. If you really want to know what's going on, I'm going to go through a couple more charts here. We've got a few more minutes. I'm going to open up the call for some Q&A. Folks, if you're watching and you'd like to take advantage of that Q&A, you're welcome to come into the trade room. I'm going to go ahead and just quickly throw in my link right here. You can go to manknownaspaul.com/connect, and there you can join our Telegram so you can get all of our updates there. You can also join my X account. Just go follow my X account or follow my YouTube account. You can also click the link to join us in studio for live market analysis every morning at 7:15 Mountain Time. And if you have any questions, or if you'd like to learn about how it is that you can seize some of these opportunities that are coming out of this great reset and pioneer the fourth industrial revolution, on that page you can also book a time to meet with me. And over that half an hour, we're going to get clarity on what opportunities are going to be best suited for you so that you can run with them and wildly profit and create a legacy for you and your children and your children's children as we go forward. So let's go through a few more charts here and share screen. That's a basic uh, temperature, basically that's your weather report for the markets this morning. We're going to go now through some of these more specific coins. Cardano, of course, likely one of my most favorites. We are now underneath this wedge pattern. Ha! But I see this as a test of this line of support, right? If you take a look at this price action, it's gone back a long ways, bouncing up and down from this area. And so to see this bounce here is actually a good sign, especially after coming out of that wedge. This would be very similar. This is the type of, this price action here follows the Wyckoff theory, where we have that distribution and consolidation of the asset into a quick test going below, only to break out going up. Solana also seeing the same type of thing. But we know that this line here is likely to be the support because it was just yesterday, I think it was, day before, there was an announcement that Solana is going to get an ETF. So get ready, because we all know what happens after the ETFs get attached. What? Let's go back to Bitcoin. ETFs attached back at the beginning of January. Where's that? Right there. January. So ETFs got announced, bounce up, test down, and we haven't seen that price ever since. Ethereum. ETFs got attached, what was that, March? April? Something like that. Let's go see. That's October, January, February, March. Of course. So ETFs on Ethereum, it got issued in here, but that makes sense that they would push the price down because they started launching the ETFs here. So they've been dollar cost averaging this whole time. And I remember when the price dipped down in here throughout the summertime, I was like, the amount of money that was loaded into Ethereum during this consolidation was obscene. And as a result, the institutions are not going to want the price to go below this area. This is again after the ETFs were issued. We had this consolidation, and of course coming back up to this high. So I take a look at this and I see this here as kind of being our last line of support. If we fall back below this, we could very well be testing these levels again. I don't think it's going to happen. We've just got so much narrative right now, and things are just coiling up within the markets that I don't believe that we're going to see these prices again, simply because the institutions are not going to want to show their clients that they're in a loss. So I think that this area here was where they purchased. Man, I've been going back to Ethereum and Bitcoin. I think it's because I want people to recognize these waves and how they occur. Bitcoin, Ethereum. Bitcoin, Ethereum. Think of it that way. That's just the order in which these bubbles are happening. So Bitcoin definitely did its run, creating all new highs. Ethereum is next. It's just simply waiting for all the institutions to get in line and put their money in the right position. That's what I truly believe. Cardano. Let's go up. Injective. Beautiful price action coming down nice and low. Folks, remember last summer we were down here at the $7 range, right? So $7 back in there's April, May, June. This is when I first came in, and it's up 183%. It went up higher. It went up. What is that? 500%, 600% from the summer. And then has retraced back down. This area here is wonderful. You can see how many times this price location kept on getting tested here, and there now again. So we're in a good spot with Injective token. Definitely a buy area. I wouldn't be selling. All right, so here we got Fetch also. Great support area here. You can see that this test was given right here. We might see that one more time before we start heading up. on this AI run could very well be happening. I actually do. I would suspect that this would come back to retest this. I'm just going to say that. I might be wrong, but I think that we're going to see one more test of this trend line. Polygon, but don't sell. Polygon also retracing after this high. Yeah, it's basically right at the same levels that I started buying. It's awesome. Let's go back out to a weekly chart here just to see a little bit less detail. We can get a better idea. Oh, look at this. How it just high goes, this beautiful low here goes higher, but then it goes lower. But this here is kind of the wedge. If we take a look at this is a macro view, folks. There's the wedge right there. You see that? Oh, look at how that, well, it's not exact. It's not an exact science, but you can see how that wedge, like they broke out and it's even staying below. Why? Because it's Polygon. Polygon is for the gaming bubble. So it's nice and low, waiting for us to make all kinds of money with the AI coins so that we can flip that money and put it into here before it goes crazy. Because right now it's only at 41 cents. 41 cent Polygon? What? Yup. 41 cents Polygon. That's going to take, when we come back up to the all-time high, that's a 5x, almost a 6x. You can't get a better buying location right there. And I'm going to be talking more about gaming coins and real-world asset coins going into this, because the AI coins is anybody's game right now. There's no analyzing it. I don't think. I mean, I can analyze an entry point, but it's going to be just a flip of the coin, really. I've got my targets set very conservatively, but there are people who are doubling my targets, confidently doubling my targets. So I want to kind of start leaving AI alone, because I really don't know what's going to go on. I'm just going to follow my trade plan. That's all I can do at this point. But I'm going to start talking about gaming and RWAs, because this is kind of our mini exit strategy. I got my exit strategy going to gold, silver, land. I got art on the horizon. I'm already starting to pick things. It's kind of funny. I did my budget and I was looking at it and I'm like, okay, so if I win, but I only win half of what I think I can, my targets are one thing, right? But even if I only get half of those targets, it's a pretty good sizable amount of money. Well, I've already spent it. Not on consumer objects, don't worry. I've already figured out where I'm allocating everything in its percentages. If you'd like some help with that, let me know. That's what that link is for. That's exactly what this link is for. If you'd like some help strategizing these waves and how you can position yourself, feel free to book an appointment. That's what I'm here for. But this is a gaming coin primarily. And so we're seeing it stay nice and low below this whole pennant. Again, this is the weekly chart. And it's exciting because it's waiting for us. It's waiting for us to make those big gains in AI and reinvest them. And if you can get 5x out of AI and then another 5x out of something like Polygon, what's 5 times 5? See, this is why people are saying, I hope to 20x this year. That's easy. It's going to be easy for some people, because all you got to do is hit 2 5s, and that's it. Destra Network. Oh, this is painful. I wish I could double how much I have. Look at this. So Destra's hanging out at this low price here. We got 0 by 0 hanging out at its low price here. But just take into consideration, we've been here before. We were here in November, just after the election. And then it went up 126%. And that was while Ethereum didn't have a clue what it was doing. So 0x0 against all odds. Destra network, same idea. Like there, yeah. So we've been here before and it went up real far. 80%, just easy. This is before the bubble, folks. Oh my goodness. So here we have major support. You can see the price action right now is basically bouncing like a basketball off of this support right here. So watch out. This is where I get excited. These charts are where I get excited because it gives me a lot more detail than the overviews. Like that's what Ethereum and Bitcoin are. Bitcoin and Ethereum are overviews, but it's within these projects that I can see the details. This is where the good stuff is. So, folks, this is PAL. If you remember PAL, this was back right after the election. They dumped because they had a terrible PR day. And ever since then, they've been strengthening. So this one here, I'm excited about this PAL AI. WorldCoin, major test, super low. The highs were getting higher and the lows are getting lower. This is an expansion of the price action. Very, very volatile. Wonderful to see right before going into the bubble. But you got to be mindful. Mind this one. Technically, because of how long the time frame is, we actually have this happening. Yep. So this is a downward channel on WorldCoin right now. Also, this big dip that we just had, major support in the past. Major support in the past. So this could be the end of its bearish trend. It's a great place to buy, and if it goes lower, buy some more. That's their dollar cost averaging. Neural also showing up at this lower range, finding support, this old price prior to the election. Well, no, the election's down here. So right after the election, there was a new support created, and since then, it went up quite a ways. Look at that, more than double since the election. Oh yeah, so this is the price action. Last time we were here, we still went up 137% in a matter of a month. We could do it again. Let's do it again. Beam, another asset just driving me crazy. This one here, to go back to the all-time high, is 155%. This project is new, folks. It's a new project off the market. It's a little bit larger on the market cap than, say, Neural or PAL. But this one here, look at this. Look at how this support is so far from the all-time high. This support, when this thing lets off, easy. This movement here will be easy. It'll be effortless. You'll probably go from one day to the next, not even realizing it's happened, unless, of course, you're watching the charts all the time. That's why we have the market analysis every day, so we can check out these charts. All right, FAR, beautifully low. In fact, it's the lowest it's been, I think. Let's go back. Daily chart. Yeah, it's the lowest it's ever been. Oh, yeah, time to buy some more. Folks, I got started with this one back like August, June, July, August is when I started buying in this. And back then, it told me that my all-time high was a 17x. And I know there was another buy that I made in October. And that one, look at that, 24x. Well, right now, it's even lower. So that means that there's going to even be more growth. 36x right now. That's how much the price has gone down. Wow. Superverse. Oh, folks. We're going to make so much money, the people that told us we were funny are going to be traumatized. Oh, Superverse dipping nice and low past previous support. making sure that we get a good purchase price in at $1 right now. I think the all-time high is crazy. Yeah, the all-time high is almost $5. So just coming back to the all-time high, folks, it's at 379%. My target is $14, $15 and $25 respectively. Clearpool hanging out on this long-term trend line. It has maintained that so well, folks. Look at how well that has been maintained. After the election, of course, we had this nice little spurt, little run going up 135%. We're back down, testing those levels again. So that just makes perfect sense. NPC, one of the funniest memes out there because of just how much they make fun of people who are non-playable characters. Just repeating the Matrix's programs, right? And so this one here is, I think, well, it will have no problem coming back to the all-time high. I actually kind of feel that if I could say something, of course I can say something. It's my show. I think that when Trump launched his meme coin and then the Melania coin, I think that actually put a bad taste in people's mouths about meme coins. It actually put a damper on meme coins. Because if you take a look at when that occurred, take a look at this meme coin here, non-playable character. Here we come into the inauguration. Just before the inauguration, this is where the Trump coin got launched. And while that Trump coin got launched, I know that there's tons of liquidity that got flipped over to it. But of course, it went down 31% during that time. But it was during that time that the coin was launched. And so I think what we saw was the dumping of liquidity out of these markets into Trump, because the fully diluted volume was $80 billion. A lot of money went into that. But of course, because it wasn't very saturated, we saw that money come back in. Look at the price came down, and literally the next day, inauguration day, it came back up. And it went up 42, 43%. That's inauguration day. Is that right? Oh, no, not even quite. Not even quite. It wasn't even inauguration day yet. Inauguration day started here. Yeah, in here. Okay. So inauguration is here. And since that time, the price has not been able to get above it. So the suspicion that I have is that the Trump and Melania coin turned out to be a flop. And because it turned out to be a flop, all of the meme coins got people got, what's the term? Cold feet, I guess, is the best way to put it. Because all of the memes since then have not been performing well. So I feel like that Trump coin put a bad taste in people's mouths about memes, because it made so much money and then the very next day lost it all. Like, it went crazy. So I'm just going to go ahead and bring it up because it's, yeah, there we go. Trump on Binance. Look at this. Comes right out of the gate. Within 2 hours, folks, within 2 hours, it went up. What is that? 181%. And then it lost even more than that. Right now, it's sitting at just above the open price. What's the open price? Open price, $27.25. Right now, it's $27.76. So it's literally up. What is that? That's not even 2% up from its opening. So this chart, the only way that I think this would ever recover, is if it goes through the dark night of the soul like any other coin had to do over the last 3 years, and then make it and still have trading volume for the next bubble. I could be wrong, But I think that this coin here, Trump actually put a damper on meme coins in order to bring more attention for the in order to show the institutions where to put their money, not here. And I can tell you right now, the institutions aren't interested in memes either because there's no value there. At least they don't see it. I see the value, but they don't see the value in that old monetary mindset. The new monetary mindset is all about community, and that's what memes represent. Memes are just a representation of a community aligned with purpose. So, those are my thoughts on the market today. I didn't even see. Look at silver, still pushing up. It's like it's making fun of me, isn't it? It's making fun of me. Uh,
I guess I got some silver at the right time, though.
yeah, you did. I know. Yeah, I know. We talked about that last week. And I was thinking to myself, I mean, when you bought it, and I was like, yeah, it might still go down a little bit, but that's okay. You can buy some more and lower your cost. But no, you got it at a good time. I still wouldn't sell it. Don't sell.
No.
Keep holding on. All right, that's it for today. I'm gonna go ahead and bring things open. You're welcome to come onto the stage and let's chat if you want. For folks, those of you who are tuning in, thank you very much. I hope that this has been helpful. If there is an asset that you'd like me to analyze, if there's something that you're in, like when I go through these charts here and when I'm analyzing, I'm actually not providing any trading advice. In fact, if we want to be honest, 95% of people who get involved in crypto lose their money, even in the bubble. And the reason why is because they don't have that guidance day to day. They're not consistent. And I've not been always consistent either, and I've made these same mistakes. But it's important, no matter what it is that you're venturing, wherever it is that you may be venturing, it's important that you find community. And so, if there are things, what I do is I just share what I'm doing, what I've learned, and what I feel like I. Oh yeah, you've been bounced off. Let's go ahead and bring things all the way up. So what I do is that I just share my charts. These are the things that I'm invested in. These are the things that I'm following. And my intention is for you to simply follow along. If you want to take the trades, go for it. But I'm not telling you to take them. I'm simply saying this is what I'm doing. And I'm doing it for these reasons. And my intention is that by showing you what I'm doing, when I'm doing it, and why I'm doing it, that you'll gain the paradigms that you need to look for these opportunities yourself. That's my intention. I am not giving trading advice. In fact, I should probably have 2 or 3 disclaimers just letting everybody know that they're probably going to blow all their money and lose everything so that my butt's covered. But this is my form of disclaimer, simply sharing with you, I'm only going to teach you what's worked for me and why I make the choices I make. And I'm happy to analyze and look at your opportunities as well and see where the good entry points are. So there we go.
It's interesting to see where when I bought was October
Yep.
and October, November, and most, I guess, when you look at when I bought to now, without your guidance, Paul, I'd probably be freaking the hell out right now because all my investments are, most of them are low, right?
Right.
And when I have a little bit of extra money again, then I'm putting it in whenever I can,
Mm-hmm.
right? When it's low.
Mm-hmm.
So I guess that's my strategy is when it goes low, just buy some more, and when it goes back up, sell a little bit and keep some in there.
Yeah, I never give generalizations, and we've all heard buy low, sell high, and that is a very much a a wise strategy, but that's a very general strategy. It's not a not a very specific one. When we're in a bubble like we are, it's true though, 100%. This bubble, just like any other bubble, you simply buy the dips. That's all you do. That's the simple part. And once you reach your targets, you sell. Cold-blooded sell. Don't sell. I mean, you can be excited when you sell because there's lots of money on that side, no question. But do so with poise. You never want to make emotional decisions, ever, in trading. And the next challenge, we have this challenge right now of watching the balance go up and down and feeling the emotions that go around that. I get them too. I do. That's why many times I'll go for 2-3 days not looking at my MetaMask wallet or not looking at my ADA wallet, and simply because I don't want those emotions to come up. I don't want them to mess around with my day. The more that I trade, the less those emotions show up. And nowadays, when I'm not looking for so many days, it's just more so because I can just look at the chart and get an idea where we're at. I don't have to look at the balance. Where was I going with that? Oh, the emotions that we have now are going to pass. We're not going to be feeling them very much longer, but we're going to have a new emotion that we're going to have to deal with, and that is wild success. And Audrey, you just missed out. Yeah, what I would no, I can say it again. What I was saying was the next emotion that we're going to feel is not this, ooh, that's going down. I don't like the looks of that. The next emotion is going to be what happens when you see your account, when you wake up and your account 5x'd overnight.
Mm-hmm.
That's going to be a whole other type of emotion, and you need to regulate that. Recognize what your trade plan is. And if you don't have one yet, that's okay. If you don't know what targets to put, go ahead, ask me. I'll tell you what targets I've got, and we can go by that. And I'll also tell you how to find targets so that you can look for them on your own, and you don't have to rely on my targets to wait for the market to hit my targets. No. This is your trade plan. And once you have that trade plan, it is so much easier to regulate the emotions, because you can look at where you are compared to where your target is and make a choice. I'm not going to sell now. Why? Because I've still got another 40-50% to my target. That's going to be the key, because I can tell you, I've had it. I remember one time in 2017, I woke up in the morning just as the markets were opening up, and I was scalping the Dow Jones. So scalping is a trading strategy where you're usually trading for only about 5 to 10 minutes. So you go in and you're watching the 1 minute chart. So the 1 minute chart moves quite a bit. That gets on your nerves. But I can tell you right now, I experienced that feeling of, oh my gosh, I just made a whole bunch of money. What do I do? And not have a trade plan. Now, thankfully, I was able to just go ahead and execute, closed it out, because I didn't have a trade plan. But in 18 seconds, I made $2,600. 18 seconds. And it was just the timing of it. I nailed it, and it was a good trade. And I tell you, because I was probably only 10 minutes in, it still didn't really move around. And then I looked away, and then I came back, and it was like, whoa, there's like $800. And then it was $1,100. And I'm just like, oh. And you ever listen to the radio whenever they play that game, Beat the Bank? And it's like, you got to make sure that you tell them, stop it. I'm cutting me off. I'm running with the money I've got. I'm not waiting for the bank to go bankrupt, right? That's the kind of feeling that you have when you see that. You're just like, oh, And then I was kind of like scrambling too. I remember my finger was shaking and trying to find that button to sell because I wanted to make sure that it doesn't come back. It's a good feeling. It really is. It's invigorating, but you don't want it to control you.
No, that's a little much for me.
So that's why these good old daily market analyses are so good, because when that day comes, I'll be there with you, smiling and also following my trade plan. All right. Thanks, everyone. We'll see you tomorrow from Live Market Analysis in the morning.
I'll see you at noon my time today,
And
Paul.
I'll see you at noon, yeah.
Nice to see you, Audrey.
Good to see you,
Enjoy.
Denise.